guys, this is Julie. Good morning. Want to do a quick video to follow up on some back testing, but also to first go through a top-down analysis of where we are in the market. And to do this, I'm going to use quick strike tools to get an idea of where the upcoming major support resistance areas are using the Black-Scholes model for the monthly and weekly contracts for this coming week and the month. So, sell in April and go away, is that right? No, I think that was supposed to be May, but as you can see in April, uh, we are getting bearish. The 60-minute chart price fell under the 200 EMA, and then the 50 followed that also. So this is clearly not bullish, and just depending upon whether this is a pullback from the recent March takeoff or what's going to happen. Let's take a look at the options to try to get an idea of where the institutions may be coming in to find their support resistance, and that will help us. So the first thing I do when I get to the quick strike sheet is go to the pricing sheets, choose my contract. We're looking at the NASDAQ. And from here, I can go to the expiration that I want to review. So let's start with the monthly. And that is the NEJ2 for the end of the month, expiring April 29th. And from here, I can change it to the Black-Scholes model on the settlement. Click OK, and this will change the index to show my initial bell curve. So the mean is 14,330. So let's put a line on the chart for the monthly middle, and I'm going to put this as orange to show the middle, and put this at 14,330. So there's the middle of the monthly median. So you can see we stopped at the middle of the monthly median on the Black-Scholes model. And the first support levels for at the money, in the money, that would be 14,420. Well, let's say 14,410 to 14,420. So I can draw a horizontal line up here, 14,410 and 14,420. Okay, so you can see that is going to be the resistance, and for the support, 14,240 and 230. Okay, so here is our bull bear median, and there's resistance and there's support. And again, this is the first level. If I extend this out by strikes to 25, you'll see that I'll be able to get some more data. And what I'm looking for are levels that are pretty common for traders, option traders, to look for. And the first thing I want to know is where the high gamma is. So I can look on this row right here, and I can see that high gamma is between 370 and 430. So if I put my region highlight like that, and then change my settings from 350, well, let's see, that's not right. It's down here, 48s. Let me hang on a second. I see the 48s down here. Let me get some more strikes on here and just make sure I'm on the settlement. Yep. So it's the 48s. So it would be from 470 to 580 is the high gamma. So there's the high gamma. And you can see that price is breaking away from the high gamma. Came and bounced off of it, pulling away from it. So we have rejected the high gamma and we're moving away from it. And the other thing that I'll look for is this 45 strike, 14,450 to 14,460. Okay, so you can see that I've got a bunch of lines stacked up in front of that high gamma. If we get above this first resistance, we'll probably get pinned in that 45 strike. And then to the top, I want to look for the 68 strike, and that's 930, 920, and 910, 13. Down here. So there is a bit of resistance or support. I get those mixed up. You know me and labels. It's that line. Okay. So there is your 68 bumper. And the last thing I like to look at is that um, higher level at the money, out of the money level, and that would be 13,800 and 790. That seems like a logical place. So there is another level of resistance and support. And then finally, that 1 to 2 um, change, and that's between 470 and 460. Now, should we pop above this high gamma, we better be ready with some opposite trades, and that would be this 770, 780, or actually 760, 770. So I'll go ahead and put a line on the chart for that just in case. Okay. There we go. So there's my upward boundary just in case it does pop over. And one last change would be between the 1 and the 2, 15,180 through 15,190. You never know. Some news may come out. Fed says, we are sorry that we went down the primrose path. We'll never raise rates. We're going to support the markets to infinity. You never know what's going to happen. So there is another level as a bumper. And this 180, 190 before it gets there. I think I just put those on twice. Let me see. $230, $240. Yeah, sorry. Okay, there we go. There's your upper levels. So now we have the monthly options levels. Now we can change this to go to the weekly expiry and do the same thing. We want to change it to Black Shoals on the settle, and I'm going to make this 25 strikes. Okay, so we kept the same middle, 14,330. Is that right? Yep. But this time we come in a little bit earlier for that first support resistance, and that would be 14,280, 270. Okay, and to the upside, 370, 380. Okay, so now my chart is completely marked up the way I like it. If I want to extend this out for further upside, I can look at this 68 between 14 100 and 110. And to the downside, the 45 or 35. 45 is really close to this 370, so I'm going to drop it down to the 35. 500 to 510. All right. So there are outer strikes available if I change my strikes to all. I could widen this out, but I don't really need to push that weekly out any further because it probably will go into the monthly, but I'll just look at it just in case. So the weekly 1-2 is at 13,870, 860 to the downside. Right in here. May provide a little bit of support. And where's the 1-2 on the downside? Right here. 790 and 800. All right, so my chart is done. The last thing I want to look at is just take a look at the open interest and the volume for the puts. And I'll look at the volume on the heat map. And if we just want to look at the puts, we can change this to puts and take a peek at what's coming up. We're right here at 328, right here. So you can see the high puts are at 500, right in the middle of our gamma. So that's high puts. So why don't we draw a big thick green line in here? Make it thick. $14,500. So I can just know that my puts are sitting right there, and you can see that price came up, touched them, and pulled back down. If I want to look at everything, I can just put this back on column, or well, expiry, and that'll give us the puts and calls. By the expiration that I can set. So I'm just looking for the front contracts, the most immediate to get hit for any big levels or anything like that. And these are just SPX. This is not SPY. SPX is more institutional. SPY is more retail. So, like for the QQQ SPY and the NQ SPX. So we look at the SPX. Okay. So the only other thing is this 14,350. There's a big 375 sitting there. 14,350. So I might want to just put a green line there too. Because there's some puts, and that's this 585 at 14,000, but that's a big even number. I think I'll put another green line there. Make it a little thicker. That'll probably give us a bounce. Okay, so now that my chart is marked up, the last thing I want to do is put the PT indicator on it. So what I do is I'll go and put the strategies indicator, go to my folder, put the PT on here a bunch of times. So this is the daily close, and you can see that price went right to the daily close and bounced on the PT2. And that PT2, here's your PT1, PT2, PT3. If it leaves the 1, you want to trade the 2, right? So we had a good 1 to 2 on Friday. And then it held price despite a lot of people trying to break that level. And if you notice, the distribution is sort of normal, fat, not really conducive for breaking tails. To break tails, you need more of a downward trajectory than channel, like right there, to get down to the tails. And then maybe further into the tails, you want a really strong down channel like that, not something fat and wide. Let's look for a tail so we can confirm that. We've had up moves lately. Here was a tail. And you can see that real thin channel here. So we bounced off the 200 through the 1, 2, and 3. So there was a 1, 2, 3, March 7th. The upper one is up here. It's hidden under the green line. So that was a really nice trade session right there. And so that is something that you want to see when you go to your tails. We broke the 3 and tried to get down to the lower tail and didn't ran out of time, but that is what the behavior is, not something that's flat and sideways. And it had a long way to go to get back to the 50. So the next thing I'll do is I'll put the same indicator on the chart, the daily, but I put the open. So you can calculate the range from the close or the open, and you get different settings. And the algos will hit both. So now we have a view of what to expect tonight, Sunday night, if it breaks this 2 and gaps down to the 3 or lower, where we might expect support to come in. If it gaps up, you can see we have resistance, resistance, and then here's the 1 at probably the 50. So this 51 area right there would probably be a good resistance area. Now the next thing I want to do is put the weekly level on the chart. And I do the same thing. So I put it on the week off the close. And to get a different viewpoint, I've got my lines solids to separate the dashes. So here's the weekly solid lines that I can differentiate the dashes from the solid. Solids are weekly. So this weekly looks like a confluence right here. Here, right there. You've got a weekly, you've got a daily, and you've got the options. Right there. 14,234 to 14,223. Somewhere around here. So if we do break down Sunday, Monday, I would be looking for that level to bounce on the first hit. Anything below that or the tails even lower. So let me put the opposite, well, not the opposite, but the weekly open. So I can put my indicator on the solids, but change the calculation to the open. And that gives me 2 different levels to trade to. So this looks like a really good area for first support resistance. If we break past this current level that we're at. Otherwise, we, reverse back to the averages and have a bit of resistance going back up. You've got a weekly level here and some option levels. And this option level sitting on the 1 at the 50 EMA right in here looks like a pretty healthy, confluence area. So I look for confluence. I look for multiple lines hitting my area, my levels. And I recently subscribed to Infinitus Capital Levels because it gives me a fantastic confirmation of my levels. So I trust my levels. Let me just qualify that. But it always helps to get confirmation. So I'm looking for these confirmations of the, the cumulative confluences. The more confluence that I can get, the better. That I think that level is going to be very strong and attract price. And their levels are excellent. They're different than mine. They use different calculations, but they are statistical levels, and sometimes they're very close to mine. Once in a while, they'll actually be on the line that I have, but they do use different calculations than I do. So it's, I think, well worth my time to get the confirmation of using their levels also. And I highly recommend them. Great, great quants. Their levels are awesome. So it had provided me some awesome trades last week. I should have been subscribing a long time ago just to get that extra confirmation. Anytime we can get the extra confirmation, you know what I'm saying, that provides the extra um, confidence that we need to know that there's going to be an inflection close by that level and to provide the most minimum risk with the maximum reward. So anytime that we can get there, however we do it, you might use CCI or RSI or stochastics or MACD or your volume ladder, whatever your cup of tea is, in addition to the JATS levels. I I'm going to be using Infinitus Capital levels to overlay on my analytics and my JATS levels. And anytime I can get something near where I've got my levels at, I'm going to be zeroing in on that level very, very keenly. So I'm very excited about it. And there's some great guys. All right, so with that aside, looks like down here at 1400 to 3967, we have another confluence area of weekly support. It doesn't line up with the option levels, so this tail, though, does. We've got a tail that is let's look and see what it is. It's the daily open tail with some option levels. So my analysis of this is that this will provide support in here, strong support. And so I, think about what would happen. It would bounce back up, maybe hit that level. And this is again a tail with option support. So that would provide first support right here, 14,100 to 117. And anytime you get an even number like that, you've got puts sitting there. Puts and calls sit on the 50s and the O's. So anytime you get an 000 or a 50, you're going to have puts and calls sitting on it. But so here is an obvious level. It may break through it to get to the weekly levels. Not saying it's going to do that Monday, but by the end of the week. And then if we break the weekly levels, this is where it will end up, the first touch. And we've got a few miscellaneous, maybe minor support, but your next big support level is going to be down here at the 13,798. And this is another tail below it. So I do have some bottom tails down here. Very rarely do you get through my level of tails. If it does break the last one and goes even further below, that is when you can literally start measuring your daily distribution and doing the measured move type things, because the distribution of the daily from the top to the bottom, if I can figure out where my bottom one is, right there. You can pick it up a lot of the times and do a measured move. And that right here brings us down one time, the measured move, and that probably would be the end of the line for this week. at the maximum. You know what I'm saying? I always look to see where that likely wall is going to be, because the market makers will just refuse to let it get any further than that. They'll pin it a lot of the times, unless people close their accounts. So you've got situations like COVID-19 where people just called their broker and said, close my account, close my 401k, close my whatever. They had the pension funds, same thing. They just got their money out of the equity market and put it in cash. That's when it can go into, Six Sigma, six times those measured moves to the downside. And then it stops for sure, because that's when the central banks will step in and refuse to let it get any further from that. And you can go back and measure those moves, and they are Six Sigma events. There's a reason for them to tell you that. So, so here's my analysis for this week. If we do get an upside move, my lines are drawn. I'm ready to go. Um, they always say sell the rips, so we could open up instead of down, and be prepared to sell the rips. And that's another reason I like to have the Infinitus Capital numbers, because they'll have those upside levels that I can put in here that won't match these option levels or my levels, and see if I can get some nice surprises off of that somewhere around close by my levels to look at. But I know where the high gamma is, I know where the puts are, and I'm about as prepared as I can be going into the week. So thank you so much. Hope y'all enjoyed this. Let me go into the next segment right now, and we'll run those back tests and see how the strategy did last week. Let me load the template up. Okay, let's hang on one second. The back test results are for a cumulative date for this 150 days that I've got, 911,202.59, profit factor, percent profitable 63.91. Let's put this down just for the last couple of weeks. So let me change my data series, see how it did over the last 30 days, recalculate it. And so $47,058, 2.25, 64%. Now the drawdowns are big. I mean, make no mistake. You can have 5,444 drawdown in that. So I'm not recommending this as an algo per se, but as a guideline of how to use the PT indicator using the time series volatility, like we showed on this lesson 2 long ball. So this algo takes the long ball over the 17 threshold with our other conditions that we have in there, and this is the template that you have, and just tries to get a minimal amount for the stop and the loss. And if that first order set is reached, it throws in a second order, with the theory being, if the first order was successful, then let's go back in and get a second chunk of that range. So this is a dynamic range of that 15-minute time series. If the first contract profit target is reached, then we will go in, if that order A was filled, we will throw in an extra contract and try to reach the second part of that range. So we're only looking for 68% of the range. We're not even looking for 95%. This third order set C is that phantom order to be able to cancel order set B in case this order set A was a stop loss. We don't want this order set B just sitting out there, not canceling itself and, hanging up the algo. So we have a phantom order set C. And so that looks pretty good for the performance. And that was again the last month. So all looks well for this algo. And again, I would recommend that you put other conditions on yours, like trend following, or maybe restrict it to a time frame. This is 24/7. So if you want to just restrict it to you know, the RTH session, then we can rerun it and check it. Let's do that. And you can, of course, move your logic down to see what it looks like intraday. So you can see it goes long and short. And just whenever it hits a band, it'll take a trade in that direction, trying to get to that first partial, easy, low-hanging fruit target, and then the second one. So intraday, the RTH session by itself, still pretty good. Good percent profitability and good profit factor, but we've limited the total net profit because it's discounting the Globex. So the best profit for this logic would be to be running it with Globex also. So that's why I have it not restricted by time, and reload it. Just, taking trades using the dynamic nature of the PT indicator to determine what those stops and profit targets are going to be dynamically shifting in that volatility. And again, I'm not recommending that this be a algo by itself. It's just a template that you can use for yourself to build your own strategy from using and learning how to use the PT indicator for your own strategies. All right, and that is it for today. So our chart is marked up, and I am ready to go for the night session. I am going to go and enjoy my afternoon of sunshine and come back and look for the Sunday open and see what happens here if we move back to that 50 EMA, or are we going to gap down to our PT3 right away? Y'all have a good one. Talk to you soon.